Yes, I can see the presentation.
One, two. Check mic one, two. Check mic one, two. One, two. One, two. Check mic one, two. One, two. One, two. One, two. One, two. One, two. Nice one. Nice one. Now make it. Because you need to check it up. One, two. Check mic one, two. Yeah, it's a nice. What's your name, my friend? Good afternoon, Robert.
Good afternoon to you. How are you?
How are you, Robert? Looking smart, as always.
Hey, Alex. How are you doing? Oh, this is the one Alex. Testing 1 2. Testing 1 2 1 2. Usually do it. Yeah, somewhere there. Okay, yeah, it's here. My phone is.
Yeah, 1 2. Testing 1 2. Say yo. Yeah, 1 2. Sound check. Testing 1 2. 1 2. 1 2. 1 2. 1 2. Sound check. Yeah. 1 2. Yeah. Hi. 1 2. Sound check. Testing 1 2. Evo 1 2. Yeah. Mm. No. One, 1 2. 1 2. Yeah, 1, 2. Sound check. Testing. 1, 2. Yo. Testing. Sound check. 1, 2. Yes. 1, 2. Sound check. Yeah. Yeah. 1, 2. Yeah. Sound check. Testing. 1, 2. Yo. Yo is. Yeah. 1, 2. Sound check. Testing. 1, 2. Yo. Sound check. Level 1, 2. 1, 2. Sound check. Yebo. Testing. Online. Sound check. 1, 2. Yebo. 1, 2. One, two, yeah. Testing 1, 2. Yeah, bo. Sound check 1, 2. Testing. Sound check 1, 2. Yeah. Yeah. Yeah, bo. Yeah. Yeah, bo. 1, 2. Sound check. Yes. Testing 1, 2. Yeah, bo. Yes. Yeah, bo. Yes. 1, 2. Yeah, bo. Yeah, bo. Yeah, bo. 1, 2. 1, 2. 1, 2. Sound check. Yeah. Yeah, bo. Yes. So, testing 1, 2. Say 1, 2. Sound check 1, 2. Yeah, boy, yes. 1, 2. Yeah, boy. 1, 2. 1, 2. 1, 2. 1, 2. Yeah, boy, yes. 1, 2. Yeah. Yeah, boy. 1, 2. 1, 2. Yeah. Yes. 1, 2. Yeah, boy. Sound check testing 1, 2. Yes. Testing 1, 2. 1, 2. Sound check. Yes. Testing 1, 2. Yes. Sound check.
1 2. US level 1 2 1 2 1 2.
Is it still muted?
it again. Stop sharing again. Share. Include sound.
Translates to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000 customers. And if we look at the number of people who work in each and every outlet of those 40,000, they turn out to be about 10 people per outlet, giving a number of 400,000 people that are supported by Delta. Then internally, the company employs over 7,000 people in the region, Zimbabwe, South Africa, and Zambia. And obviously those people, that's our employees that we have, also have families that they look after. And if you look at the ripple effect of the work that Delta is doing in the economy, it talks to the theme that we have this year of industrialization. And if we look on the other side on contribution by the company, we pay an average of 180 million US dollars in taxes to, and this is a huge contribution to the fiscus. So we are really excited to be part of this year's trade fair, benchmarking ourselves with best practice and other organizations that we see here, so that we continue to innovate and to grow as a business. We are here this year again as Delta Corporation at the Zimbabwe International Trade Fair 2025, and we are excited about the theme that this trade fair is running with. The theme talks to industrialization, and we believe as Delta, we are contributing much to the GDP of this country. We have become very innovative in the past 120 years through the product offering that we give, whether it's our soft drinks, the Coca-Cola business, where we have brought in innovation with our maize and dairy products. Recently, we introduced the Shumba Mahel brand. On the lager beer portfolio, we have also innovated the offering that we give as a business. 2 years ago, we introduced the Sable Lager, giving our consumers more taste preferences in a dynamic world where consumer tastes are changing. In the Chibuku category, which is the opaque beer, we have introduced Chibuku Super Banana and Chibuku Super Ginger and Pineapple. Again, just expanding those product offerings for our consumers. And as we look at the whole value chain for the business from seed to sip, we have developed this nation through employment. We've got 47 commercial farmers as Delta that we have contracted this year, and 12,000 small-scale farmers. And if you multiply the 12,000 small-scale farmers that we have contracted, being farmers who are looking after 8 people in a household, this will translate to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000.
Potsi piri kuraira mshina. Potsi piri kuraira mshina. Potsi piri kuraira mshina. Potsi piri kuraira mshina. Potsi piri kutesta. Potsi piri kuraira mshina. Potsi piri kuraira mshina. 1 2. Testing 1 2. Nice one, nice one. Kaluyisa. Kalupinda kwa speaker. The speaker do to something number so the sound. Yes.
Sound, the video, the presentation. Do you have any comments? Confirm you are hearing me.
I don't know, but
I, Noctula.
I can hear you.
Okay, the video.
Yes, I can see the presentation or the page that is being shown on the screen.
So, on the podium, what do you see on the podium? Are you seeing something on the podium right now?
A laptop. Yes, a laptop and I think it's you standing there and the backdrop So Delta, you are adjusting the mic, I think.
1, 2, testing. All right, Noctula, come back again. What do you see on the podium? And again, can you hear me well?
Albert, I can hear you and see you on the podium.
All right. How about here? Am I audible while it's standing here?
Yes, you are.
How about here? Are you picking my sound from here?
Yes, you are.
All right.
Yes, I can pick it.
Okay. Thank you very much for that confirmation. Be on standby. We might need you to confirm for us again, especially when we are about to start, because yeah, it will be important to hear your voice. We'll make sure Rumbi gives you a microphone and pay.
Okay.
Thank you, ladies and gentlemen. We looking good. Cheers.
Yes, 1, 2.
1 2. Check mic 1 2. Good afternoon, everyone. 1 2. Check mic 1 2. 1 2. 1 2. 1 2. 1 2. What's my voice?
Yeah. 1, 2. Yes, 1, 2. Sound check. Yeah. Yubo. Yubo, yes.
1, 2, testing. Good afternoon. We again checking if we are still live. Those connected online, please can you confirm if I'm audible?
I hope that we can hear you.
Thanks, Nogo. It's around 17 past. I'll come around 1:45. Thanks.
Okay.
afternoon. Those online, we checking sound again, confirm you can hear me. Noktula, it's 1:45, and we needed your confirmation. Yes. Hi Noktula, are you still around? Yeah.
Hello, Robert.
Yes, who is speaking?
Yes, Gabriel.
Okay. We wanted to check if we are audible.
Yes, we can hear you.
Are you seeing the first page of the presentation?
Yes, I can see the bottle there.
Thank you, Baba. Thank you, Baba. So come back to you
I'm
again.
excited about the theme that this trade fair is running with. The theme talks to industrialization, and we believe as Delta, we are contributing much to the GDP of this country. We have become very innovative in the past 120 years through the product offering that we give, whether it's our soft drinks, the Coca-Cola business, where we have brought in innovation with our maize and dairy products. Recently, we introduced the Shumba Maheo brand. On the lager beer portfolio, we have also innovated the offering that we give as a business. 2 years ago, we introduced the Sable Lager, giving our consumers more taste preferences in a dynamic world where consumer tastes are changing. In the Chibuku category, which is the opaque beer, we have introduced Chibuku Super Banana and Chibuku Super Ginger and Pineapple. Again, just expanding those product offerings for our consumers. And as we look at the whole value chain for the business from seed to sip, we have developed this nation through employment. We've got 47 commercial farmers as Delta that we have contracted this year, and 12,000 small-scale farmers. And if you multiply the 12,000 small-scale farmers that we have contracted, being farmers who are looking after 8 people in a household, this will translate to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000 customers. And if we look at the number of people who work in each and every outlet of those 40,000, they turn out to be about 10 people per outlet, giving a number of 400,000 people that are supported by Delta. Then internally, the company employs over 7,000 people in the region, Zimbabwe, South Africa, and Zambia. And obviously those people, that's our employees that we have, also have families that they look after. And if you look at the ripple effect of the work that Delta is doing in the economy, it talks to the theme that we have this year of industrialization. And if we look on the other side on tax contribution by the company, we pay an average of $180 million in taxes and this is a huge contribution to the fiscus. So we are really excited to be part of this year's trade fair, benchmarking ourselves with best practice and other organizations that we see here so that we continue to innovate and to grow as a business. We are here this year again as Delta Corporation at the Zimbabwe International Trade Fair 2025, and we are excited about the theme that this trade fair is running with. The theme talks to industrialization, and we believe as Delta, we are contributing much to the GDP of this country. We have become very innovative in the past 120 years through the product offering that we give, whether it's our soft drinks, the Coca-Cola business, where we have brought in innovation with our maize and dairy products. Recently, we introduced the Shumba Maheo brand. On the lager beer portfolio, we have also innovated the offering that we give as a business. 2 years ago, we introduced the Sable Lager, giving our consumers more taste preferences in a dynamic world where consumer tastes are changing. In the Chibuku category, which is the opaque beer, we have introduced Chibuku Super Banana and Chibuku Super Ginger and Pineapple. Again, just expanding those product offerings for our consumers. And as we look at the whole value chain for the business from seed to sip, we have developed this nation through employment. We've got 47 commercial farmers as Delta that we have contracted this year, and 12,000 small-scale farmers. And if you multiply the 12,000 small-scale farmers that we have contracted, being farmers who are looking after 8 people in a household, this will translate to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000 customers. And if we look at the number of people who work in each and every outlet of those 40,000, they turn out to be about 10 people per outlet, giving a number of 400,000 people that are supported by Delta. Then internally, the company employs over 7,000 people in the region, Zimbabwe, South Africa, and Zambia. And obviously those people, that's our employees that we have, also have families that they look after. And if you look at the ripple effect of the work that Delta is doing in the economy, it talks to the theme that we have this year of industrialization. And if we look on the other side on tax contribution by the company, we pay an average of $180 million US. We are here this year again as Delta Corporation at the Zimbabwe International Trade Fair 2025, and we are excited about the theme that this trade fair is running with. The theme talks to industrialization, and we believe as Delta, we are contributing much to the GDP of this country. We have become very innovative in the past 120 years through the product offering that we give, whether it's our soft drinks, the Coca-Cola business, where we have brought in innovation with our maize and dairy products. Recently, we introduced the Shumba Maheo brand. On the lager beer portfolio, we have also innovated the offering that we give as a business. 2 years ago, we introduced the Sable Lager, giving our consumers more taste preferences in a dynamic world where consumer tastes are changing. In the Chibuku category, which is the opaque beer, we have introduced Chibuku Super Banana and Chibuku Super Ginger and Pineapple. Again, just expanding those product offerings for our consumers. And as we look at the whole value chain for the business from seed to sip, we have developed this nation through employment. We've got 47 commercial farmers as Delta that we have contracted this year, and 12,000 small-scale farmers. And if you multiply the 12,000 small-scale farmers that we have contracted, being farmers who are looking after 8 people in a household, this will translate to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000 customers. And if we look at the number of people who work in each and every outlet of those 40,000, they turn out to be about 10 people per outlet, giving a number of 400,000 people that are supported by Delta. Then internally, The company employs over 7,000 people in the region, Zimbabwe, South Africa, and Zambia. And obviously those people, that's our employees that we have, also have families that they look after. And if you look at the ripple effect of the work that Delta is doing in the economy, it talks to the theme that we have this year of industrialization. And if we look on the other side on tax contribution by the company, we pay an average of 180 million US dollars in taxes and this is a huge contribution to the fiscus. So we are really excited to be part of this year's trade fair, benchmarking ourselves with best practice and other organizations that we see here so that we continue to innovate and to grow as a business. We are here this year again as Delta Corporation at the Zimbabwe International Trade Fair 2025, and we are excited about the theme that this trade fair is running with. The theme talks to industrialization, and we believe as Delta, we are contributing much to the GDP of this country. We have become very innovative in the past 120 years through the product offering that we give, whether it's our soft drinks, the Coca-Cola business, where we have brought in innovation with our maize and dairy products. Recently, we introduced the Shumba Mahel brand. On the lager beer portfolio, we have also innovated the offering that we give as a business. 2 years ago, we introduced the Sable Lager, giving our consumers more taste preferences in a dynamic world where consumer tastes are changing. In the Chibuku category, which is the opaque beer, we have introduced Chibuku Super Banana and Chibuku Super Ginger and Pineapple. Again, just expanding those product offerings for our consumers. And as we look at the whole value chain for the business from seed to sip, we have developed this nation through employment. We've got 47 commercial farmers as Delta that we have contracted this year, and 12,000 small-scale farmers. And if you multiply the 12,000 small-scale farmers that we have contracted, being farmers who are looking after 8 people in a household, this will translate to about 100,000 people that the business is supporting. In terms of our customers, we do have a database of about 40,000 customers. And if we look at the number of people who work in each and every outlet of those 40,000, they turn out to be about 10 people per outlet, giving a number of 400,000 people that are supported by Delta. Then internally, the company employs over 7,000 people in the region, Zimbabwe, South Africa, and Zambia. And obviously those people, that's our employees that we have, also have families that they look after. And if you look at the ripple effect of the work that Delta is doing in the economy, it talks to the theme that we have this year of industrialization. And if we look on the other side of
Thanks, Alex. Good afternoon, all, and welcome to our analyst briefing. Thanks for coming to hear our story. Having seen the results already, I'll be very, very brief in my commentary so that we can have a lot more time for questions and answers. I'm sure you've had time to digest what you have seen. Confirm, admin, that you are happy for us to go. Thank you very much. Overall, let me say we are encouraged by the group results, by the group performance, barring the sugar tax issues that we have explicitly explained in the accounts. We think the engagements will reconcile our positions and that the strategic direction is right. We have grown both volumes and earnings, and resultantly we have paid a dividend of just over $28 million, which I think is the direction that businesses should be going. Our march into Africa is delivering
fairly well for us. We are happy with what the business is doing in South Africa. It's responding to treatment. We've gotten to a position where in some months we are beginning to break even as we try and fine-tune that category in that country. You will remember that it's almost like a category relaunch for us because there wasn't much commercial sorghum beer production there. So we are fairly happy with that. We are somewhat disappointed with our outturn in Zambia. It's not because we couldn't see it coming. It is with our eyes open as we were looking at the challenges there, especially power outage and so on. But we know that there are opportunities that are now availing themselves, especially with the new excise regime that has been unleashed there. So we are happy we are going in the right direction. But let me take a step back and just talk to the environmental issues that you have seen already in our write-ups and our commentary. From a global perspective, the global economy is projected to slow. We are lucky we are in those countries where we are projected to be growing on average 6%. So we hope that that momentum will carry us. It's okay. It's okay. We are hoping that that momentum will carry us as we go into the future. If you look at the goings on in the globe, the soft interest rates in the Americas, the uncertainty around the dollar is driving up dollar gold prices and commodities. And we are lucky that in all our markets, in the three markets, we're a commodity-based economy, and therefore we might see our economies performing better. If I go into Zimbabwe specifically, I apologize, this thing is running in a different direction there. Yeah, right. If I go into Zimbabwe specifically, we have not been in this steady environment for a long time. We've seen a very steady operating environment in Zimbabwe in the last half year. Inflation has been steady, influenced by the zinc scarcity and illiquidity. We have various challenges in the utilities space, both power and water. Forex trading has been a big plus. The downside being that you are largely in cash, trading cash, so the logistics of moving cash around is an issue. But there's robust, very, very robust demand that's coming through, powered by the agricultural outturn, the artisanal mining that's going on, diaspora remittances, and infrastructure, limited infrastructure projects that are going on. So we are somewhat in a good position as far as Zimbabwe is concerned. However, we do know that the sugar, the soft drinks business has been destabilized somewhat by the sugar tax that has not been corrected. We have seen colleagues in this industry reporting huge double-digit minuses versus prior years. You will see that Delta is holding, but it's holding at a cost because we have to take long-term strategic views about how to keep consumers in our franchise as we engage strategically with all the stakeholders that may influence this situation. No, I don't know. It's not moving. This is moving and that is not moving. Okay. I think we're together there. I'll drive it from here. So, in South Africa, challenges of unemployment persist. The reliance on SASSA grants. There we are. Technology is always nice, isn't it? The reliance on SASSA grants in the target market, and the firm rand is promoting some type of slowdown in cost-push inflation. But there is some buoyancy still in the fast-moving consumer goods and value goods in that market. In Zambia, we have seen the kwacha firming at the back of firm copper prices. It's a market that's difficult with disposable income, but agricultural recovery from the last rainy season has also helped to mitigate some of their problems. However, in this market, we continue to have some serious power challenges. 20 hours without power. So your primary energy now is generators. Our efforts in buying generators have not been very successful. We bought generators that we thought were the right size, right technology, but they've given us some serious problems. We are busy recommissioning now bigger size generators to be able to run that business based on the fact that we will have to use generators for power. Madam, I am likely to give, there we are, finally. So, you have seen, therefore, the summary of our performance in the lager beer space. I must say, colleagues, that we have had some type of record run rates in the last 6 months. We thought we were running high last year. We ran even higher this year. The result of which is that we have essentially doubled the run rates over the last 4 years, and in fact, therefore doubled the volume within that category. Premium offerings remain an opportunity, both for global brands and for our local premiums. We know that our supply into the market has not been 100%, because when you are running at the capacities that we are running at, sometimes you sacrifice brand and pack and disappoint consumers here and there. But the good news is that we are investing behind the demand. We are putting up new packaging lines in Bulawayo, a new packaging line in Bulawayo, and a new brew house in Bulawayo, and doing some refinements onto our Harare factory to increase that capacity. Flavored alcohol beverages are becoming a new that we are seeing in terms of growth in demand. It's an opportunity that we are chasing together with premiumization, and we think that once we've sorted out our capacity, we will get somewhere there. In Sorghum beer, those numbers that you are seeing are also beginning to register record run rates in this category. Disposable income in the rural market specifically, influenced by the better agricultural outturn and artisanal mining, has been very strong. Innovation is likely to drive this category as we go into the future. And we are certainly not going to be left behind. We're going to take a lead on it. And soon, I'm sure we'll be hearing new news about the things that we are doing in that space. I know there's been a lot of computer activity around the Chibugu super equivalents, and in spite of that, we still see strong demand on our products. I am speaking ahead of this slide because it is not moving fast, so I've covered lagers. And it is freezing, so it is not going. There we are. Okay, we have spoken to all those things there in lagers and sorghum. And we are now in sorghum, South Africa. So in sorghum, South Africa, I've already said that we are seeing a very interesting run rate. We don't have huge volumes yet. We are managing to switch people from traditional African beer, as you know it, the 4-day, 5-day shelf life product, into super. We are improving both volume and margin as we do, and therefore we have begun to break even in some months there. And we hope that we will continue to drive that growth. I've already spoken to Zambia. You can see this steep decline. It's nothing to do with demand. It's more to do with supply. Power is a real serious issue. We have bent at least 2 or 3 generators in the last 6 months, as we are trying to compensate for this production. So we are going for double-sized generators so that we are able to underutilize the power. Because, as you know, you think you are buying a 1 MV generator or half of that, you run it for 15 hours and it says, no, I should have rested every 4 hours. And the manufacturer tells you you can run, so you think you are running until you realize that you are in trouble. Madam, it still won't go. Okay, there we are. It's gone straight back to the environment. Okay. Sorry about that. I'm trying to talk to the slides, but I'm running so much ahead of them. So let's go from there now. Anyway, as the slides are rolling, let me go to sparkling beer, sparkling or soft drinks, soft beverages. I've already just been saying that we have grown, but we have almost grown on empty cases at the back of a strategic decision to hold our prices, keep our consumers in the franchise as we engage government on this matter. We are eagerly awaiting the budget to see whether we're being heard. We think we are. We think it was the right strategic call. However, the volumes are responding. The consumers are showing that they've got disposable income if the products are affordable. That's why you don't see us going down like others. And we've gone up in the process. I've done that, so we can go ahead. Let me go to Schweppes. We took over Schweppes around about May. We have driven a good mix on Schweppes, improved earnings and profitability in the last few months. We have seen the business, especially in the juice arena, improving after we years plant and eliminate production inefficiencies. We believe it's a good buy. We think it will add value to the portfolio. And we look forward to that contributing. Meantime, they are also adopting group operating systems and ways more fully because they were an associate back then. and we are seeing benefit in that regard. We also took over Maheu, in course, that Shumba Maheu brand from Ades, and you saw that we have grown over 200% in the last 6 months versus last year. A lot of innovation will come in that category as we drive into the future. Meantime, we are upgrading the capacity there to be able to produce more. There are markets that we are not delivering optimally in that category. And finally, AFTIS, you saw the results. Wines, spirits, RTDs, they are all charging ahead at well over 40% for most of them. The profits have grown even better. Dividends have been good. We think that in the next year, AFTIS will also be investing $8 million to put up a new line and $2 million to invest, or $1 million or $2 million to invest in containers as we ramp up the RTD category. I think I will stop there and allow Mr. Makamure to come and talk to you about the finance. Hopefully, we have uploaded these. Mr. Makamure, ready yourself to speak without the computer because it's not going. Hopefully, we are uploaded, and that we will be able to see online. Let me, however, before he comes, just talk about one thing that I couldn't see because the screen was down. Just the update on NAMPAC, our associate. The TSL deal fell through. We remain at our just below 22% shareholding. We are engaged with our colleagues at NAMPAC South Africa in a strategic review of what that means going forward. Meantime, the business is getting the authority to do a bit of the necessary capex to capture the emerging opportunities. And I think in time, we will know what the position will be as we go into the future. Thank you very much. Shall I ask Alex to please come through?
Thank you, Mats. With the team, I profess to have done some ICD, so I'll navigate. Yeah, so I'll go to the financials as usual. We start off by talking to the issues around the results. They are not audited or reviewed half-year results. These are, they were looked by our external auditors on the agreed upon procedures. So they are robust numbers, as you will see. They are in US dollars. We moved to US dollar reporting from October 2023. We see that the distortions that we used to get arising from currency, IS-21 and issues like that are reducing. And we believe that the numbers themselves are talking to the underlying business performance that Mats has spoken to. The only other issue is that as we consolidated Schweppes as a subsidiary, there are no comparatives, and therefore the new numbers in terms of turnover and earnings relating to Schweppes are adding to the growth that you will see in the comparatives. So when you do your numbers, you can adjust them for the impact of bringing in a subsidiary that was not in the previous year. I think that's the overall background, and therefore, we are showing the revenue up 20%, but in reality, if you adjust for Schweppes, the growth will be about 20%, driven largely from, like you're saying, from volume. because we have not moved on pricing in any substantial manner across our entire portfolio. There will be some kind of, limited adjustments out of AFDIS, because in the other year they had taken some deep pricing in their RTDs as they were trying to deal with competition from imported variants of the same. The major issue there is as we look at the segment reporting, there is the issue that the counterweighting of the portfolio is mostly in favor of our lager beer, and the lager beer business is clearly driving the bigger element of the result. Not that we should slow them down, we are actually doing the other opposite of trying to drive them further, because we see the opportunities in the market in terms of the available spend, particularly the issues around premiumization of the category. We are not supplying enough of the global brands. We are not supplying enough of the local Wethmo, like Castle Light and Zambezi, which would have led to slightly more in terms of that kind of volume growth. We want that to be weighted ahead in terms of the more premium and Wethmo category. The growth there that we are seeing in terms of the EBITDA at 51%, like I said, it's really an issue about the prior year numbers did still have some gains or reductions. Remember, we had a huge devaluation around end of September last year, which was factored into those numbers. So, whilst your operating income and is growing steady at that 54%, there's also just the issue that there was some kind of realignment of the numbers in the prior year. So we need to take that into account. So if I move on to just the issues there, so we are seeing a bigger portion of our portfolio being in US dollars. I know that we wish to de-dollarize, but the reality on the ground is that the economy is largely dollarized. We would want to receive revenue in both currencies, because we still have quite a significant use of the ZiG in terms of our statutory payments. Some of them are the ones that lead to these disputes on taxation, because we argue around what the legislation says in terms of the currency of payment. But we believe that are still payable, and those numbers are, to my mind, they would be in the order of 6 to 10 million a month, and therefore, and they are all now being paid on the same date of the 15th of the month following. So on that particular day, my treasury team is busy trying to get the local currency. So we would want to get all the currencies into our portfolio, and we have to get the support of our banking partners in getting the currency. So 90% is on the high. Lager beer is probably about 99% dollarized. So most of it is also because of the change in the channels. Because of the issues that the CEO did speak to about, I think he didn't call it out, we still have some issues in the formal retail. Our colleagues in the formal retail are still not where they should be, and that is the channel that would obviously have been pulling a lot more product in local currency. And because they are not attracting fit, it means we are also not getting the required proportion of the foreign currency. So that's the issues around the route to market, and that route to market of avoiding the formal retail also says that to access the informal sector or the informal traders, you've got to go through wholesalers. And in our own setup, when you go through the wholesaler, you have to give them a discount so that they sell at the same price that your trader would have bought from our truck. So that is me funding that channel instead of going into the retail. So there is some pressure on margins when you change the route to market. So we are also seeing that. I'll have a slide there that talks to our own trending of some of the key raw materials and packaging materials. You know, when you talk about white maize, for example, we are sourcing it through importation and our local contracts. But the numbers that come out of official, we produced over 2 million tons of maize in Zimbabwe, but we don't quite see it. It could be anything between 600 and 1.2 million, wherever you place it. It means that we have got enough to, out of our contracts, to maybe December, January of next year, and we will be going into the import markets. And fortunately, when we go into the import markets this year, the prices are softer. In South Africa, around this time last year, white maize was trading around 5,500 to 6,000 rand per ton. As of now, it's somewhere between 3.5 to 4,000 rands per ton. So there is some softening because of the agricultural season last year or this year. In Zambia, it's the same situation where the prices had gone to over $400 per ton. But this year, our own contracting, we were able to deliver around the $330 per ton thereabouts. So generally, the commodities are trending in the right direction, and we want to continue to exploit. We did speak about the devaluation, and that as we start the second half of this year, we are now out of the major changes arising out of the huge inflation numbers and the arising out of the recalibration of the currency at the end of September last year. Let's see if I can move on to, so some of the key numbers that we track. In our own internal systems, we track these numbers like operating margin against our net producer revenue. The difference between net producer revenue and revenue is the issue around some of the taxes like excise. I don't mark up on excise. So, but excise is taken as an internal cost, so it's included in your revenue, but it's not included in my net producer revenue. So when I calculate then those numbers on revenue, it gives the kind of numbers that you're seeing there. But in our own system, we track those ratios around the net producer revenue. So there's that distinction that you need to take. We are seeing some kind of recovery and the steady levels of those statistics. But in some cases, you need to strip out in the prior year, or in some cases where the currencies, depending on where they are. Like we're saying, whilst the ZiG is stable, there is still a premium between the official and the market rate of about 20%. So given that you are accounting or you are committing to payment for statutory purposes on the official, there is still that element that remains in our numbers, so we should call it out. The effective tax rate there is also a function of your historical capex and your deductibles. Some of the things, we washed out in the last currency change, so your SIAs and your tax bases have to be relooked at from the point of view that with the growth that we are seeing, your historical capex and your claims for tax purposes are lower, and therefore your effective tax rate is likely to go up in the next few years. So we're just flagging that as well. So those are the numbers. I think I've already commented on them in terms of what it is. The only other number that you see there that is the fair value adjustment on the take-on of Schweppes into the numbers. Because we're holding 49%, and now you have paid an actual price for the additional, it requires you to re-rate what you are carrying and taking on those numbers and calculating your goodwill and things like that. So there is that face value of your investment coming out of that consolidation. So that's really the only other thing that we are calling out there. If I move on, I would want to just flag and talk to the issues around how robust the balance sheet, the segment reporting. Like I was indicating, we are including, combining the sparkling beverages and the Schweppes business into the non-alcoholic beverages category as a category because they all operate under the Coca-Cola franchise. And we want to look at them that way. Otherwise, there is nothing much in terms of the changing. So the ratios and the weighting of your contributions there by segment is also being affected by the coming in of Schweppes into that category of non-alcoholic beverages. We are also seeing, as the CEO pointed out, the phenomenal growth that we've recorded around the Mahel business, where, if you saw what he flagged there, the half of F25 first half was 36,000 hectoliters. We are comparing that to current year of about 121, 127. And therefore, into the future, it will become a segment that is worth keeping track on and trying to follow through its performance into the future. The sorghum beer segment, you can see there, last year it was about 31 in terms of turnover. The issues around the performance of the Zambian business going down. It's a small business. Really, it's not changing much. If I had my way, I would probably skip it from my commentary for the next 2 years, because it's really, yes, it's important that we track what we are doing in the region. But ideally, from a group perspective, this is a little experiment that Mr. Faleda should be allowed to play around and defend and deal with the strategic issues around that business. Why I'm calling out the strategic issues around that business, if we let go that Zambian business, we have already indicated to the market that Shibuku Super is a long shelf life product. It can be moved across borders. We did import product from Zambia into Zimbabwe ourselves. You let it go to a third party. Zambia is generally a low-cost market. You give Shibuku Super in Zambia, your brand, to a third party, you lose your northern region of Zimbabwe. So let's understand it in that context, that we are not just chasing a category. We are protecting the Zimbabwe business. And the cost of it is justified from the way we look at it. We need to turn it around. We have experienced some issues in that business, but we also need to understand that at times you've got to pay the school fees for the future. I just needed to make that point. So that's the segment, and I do show a chart there that shows the weighting of the lager beer business, diluted really because of the inclusion of SZL in the numbers. But going into the future, we would want the other categories, particularly the South African business is recovering. We would need to see that category of traditional beer getting back to its weight. Let's see where this is taking me to. The other issue that we need to call out as we talk to these numbers, I do show those issues. I think we've already largely discussed it. This is tracking your issues around the market indicators. The only other thing that we probably need to talk to, I did put in at the bottom there, the ZSE index, which in the 6 months, in the year, has probably gone down. And people just try to reflect, you are the market players, you have the way without to recalibrate the Delta share price to what it should be. based on what you are seeing as a result. I get a lot of comments on why we are letting our company be traded at less than 40 cents at times. But I say it's out of our hands, it's in your hands. Those ones that are selling at 35 cents, when the underlying price reflects double, they might see other things that we don't see. So I think I'm just preempting the debate there around the pressure that we get to say, why are you leaving the counter where it is? Because I'm saying the ZSC has been good to us, let's make it good. All right, I always want to leave something as a thought. I'll move on to I have already said I will not talk too much about the balance sheet, really because the issues that you see, we were holding quite a big cash balance, but it was just for a few days. You will see in the numbers there, it will talk to a cash balance of about 50 million and borrowings of about 18, which says a net of upwards of 20. Some of it is we took on the borrowings. Schwab said some kind of borrowing in those numbers. So as we consolidate Schwab's, it's not like we went out to borrow. We were consolidating Schwab's with a borrowing of about 14, 15 million. It has come onto our balance sheet now, and we are trying to trade out. And I know we have good banking partners because Tumai has a lot more credit worthiness. He has been able to move the underlying effective borrowing rates from about 17, 18 to, I'm not sure what it is, just above 8. So that's the good, the benefit of having a big brother that can talk to your bankers on a meaningful basis. So yes, we do take short-term borrowings, particularly as we deal with these bumps and humps in terms of tax payments. Because like in the last quarter, your QPD, your VAT, your excise duty, sugar tax were all due on the same day. And that's probably 20 million in one day that you need to outlay. So you've got to go into some kind of arrangements with your banking partners. So those are some of the issues that we deal with. So really from a balance sheet point of view, yes, we are seeing a little bit of a build-up in terms of inventories as you're going to peak. We just taken on, at the end of September, you would have started taking on your barley. Most of it comes into October. But you are holding probably your highest levels of white maize because you've just come out of the end of the season where we are buying out of our contracts. There isn't much in terms of our trade debtors. The levels of our trade debtors are just about there. We're not seeing too much of a pressure there. And largely we are up to date with our payments with suppliers. So the net effect is that we are able to fund the dividend that the CEO has indicated, which is going to be about 26, 27 million. Don't use that as a measure of what it is going to be for year end, because we read the environment at the time. There's also the issue that we have committed to quite a big capex spend, that Blawayo Brew House and the packaging lines that have been brought forward. The packaging line that has been brought forward as well in AFDIS are issues that we have to deal with from our own resources. That's largely the commentary on the results themselves. I will talk to this perennial issue around the tax matters. Yes, we've had adverse rulings in both the High Court, the Supreme Court, and we were denied access into the Constitutional Court. But the Constitutional Court had a good finding that one needs to internalize, which said the issues that you complain not to have been dealt with, you have an alternative to get them dealt with by the specialized courts. So effectively, they referred the matter to the special court for income taxes or the fiscal court, That's where we are with some of these discussions. But there are some new issues that were already being discussed relating to procedural issues. So can ZIMRA issue just the foreign currency assessment for VAT without adjusting downwards the already submitted local currency return? And those are issues that the courts must deal with, and they are being dealt with, or will be dealt with at some point. They are significant matters. Also, yes, the courts determined, one principal issue that they have determined is that ZIMRA is allowed to make assessments in foreign currency. That's really the finding of the Supreme Court in our case. It has not determined what the amount and how that amount should be computed. So we have to go back to the courts to discuss whether the methods that were used by ZIMRA are correct and are supported by legislation. So we are far away from a determination of the matter in the courts. That's really the message that we need to understand. Yes, we have a big risk that we will lose this matter and will be required to pay this 70 or odd million, of which we have already paid 13. There is also the issue that once we deal with for income tax, they've dealt with 2 years. There are 2 more years where we have disputes. And yesterday I got a letter to say they want to open that discussion. So they are still, this amount could be 100 million, it could be 200 million. We don't know what it's going to be. So as of now, all we should be talking to is that there is a contingent liability which has not yet been determined. I think that's the message that we need to. I hear when people analyze these things and make headlines that Delta has lost its case and are required to pay 70 million. We will pay it at some point. We might not have a liability because we did pay these amounts in full at the relevant time. Unjust enrichment is also an issue. Government did get money to pay civil servants. I didn't use it. I was the treasurer. So that's the reality of it. So I think that's really, it's an important matter. It's an issue that we are tracking. We are very alive to the risk that the matter could crystallize into real dollars being paid by your company. Okay, I think that's the result. I'll just move on. I thought I was going to be done by now. Just going into the outlook. I think the environment, according to our assessment, we think we are we've already done October and into November. The situation that was prevailing remains the same. There is dollars in the market. We should capture it. In some cases, we are missing opportunities. In terms of our supply, we thought we had invested adequately behind our lager beer packaging capacity, but it seems that we are running at too much of, too close to our rated capacity, and we need to accelerate our investments to satisfy our market. We got to deal with the issues around the efficiency of our distribution and make sure that we satisfy our customers and consumers. I think those are the key issues. The balance sheet, remains well capitalized. We need to make sure that we don't lose that capital when policy changes do happen. The regional operations, like we said, allow us a little bit of space. We think that we will win. We are seeing the opportunities, and we will continue to search for those opportunities. The issues in the global environment relating to tariffs and the currencies, so as of now, because of the way the dollar is, we import a lot of materials and capex out of the Eurozone. It is costing us quite a bit in terms of the cost of our investments at the moment, because the euro normally should be 90% of the US dollar. Is currently 1.2, so it's quite costly. We have to defend our territories in terms of market. All our markets are competitive, or our categories are competitive, and we got to work to win in the market. Yes, there are people seeing a lot more opportunities. One can see that the weighting of the lager beer business is attracting players. We have no issues fighting competition. All we ask for is that the market remains fair, that the new entrants are coming in on terms that do not result in them being funded by us Zimbabweans. So that's all we ask for. We have good brands. We can bring in new and more robust brands, exciting the market, and we are able to compete if the playing field is fair. We have had the school fees in soft drinks, and we know what it means. So we will continue to talk to it. And particularly the biggest defense is to be able to supply. And that has been one of our letdowns in all the markets. The issues about our sustainability platform, we sell alcohol. We know that it has negative impacts on our socio-economic issues. We continue to play our part in promoting responsible consumption. Come and fund all the rehabilitation centers because it's your problem. And I'm saying, but I've not supplied any single drug. So alcohol is, our beer particularly, is a social drink. And we believe that it has more benefits than negatives, if consumed responsibly. So I work in corporate affairs. I'm the policeman in making sure that you don't drink and drive. So you also promote the issues around designated drivers. If you want to go and enjoy your party, make sure that one of you is alcohol-free for the night. Give him lots of water. And there's Bon Aqua for you. So I'll go just to the issues. In the picture there, we show our team there doing the groundbreaking ceremony at Belmont. I think we do this every 20 years, like he was telling me, that we break these brew houses and want to rebuild them. I hope next time this one we do will be about 35 years for us to do the same. But I think the reality is that the demand that we are seeing is a little ahead of our expectations, but we still think that there is a lot more, headroom for lager beer when you compare to our consumption levels compared to the other markets. Our per capita consumptions on legal drinking age are still on the lower side of the spectrum. The numbers that you see being peddled that Zimbabwe has the highest per capita consumption are incorrect. You can calculate them for yourself. Like Mr. Folela has already indicated, the continued engagements with the regulators on issues around tax and tax policy. We do submit very detailed papers and submissions, not just to deal with our own issues, but in some cases where we see gaps in terms of the policies, in terms of the regulatory issues, we do proffer solutions which might be taken on board or ignored. I think that's the story. I will not go through the issues around sustainable development. It's a report that is mandatory now in terms of Zimbabwe Stock Exchange regulations, and we take that as read for the meantime. I'll stop there and we wait for questions. Thank you very much. Sorry.
We are back. Having given you the results in the morning, I have no doubt that we've got plenty of questions that people want clarity on. Yes, my sister, tell me the question. So please, colleagues, if anybody has got questions, myself and members of GMC that are here, that run various businesses, will be able to answer you quite for one? Going for two? Oh yeah, okay. We've got a question there.
Okay, so I want to ask pane zvashitaura nhasi vapedzisira kutaura zvefinance vachiti zvonizvo ma-raw materials avo avari kushandisa for production we are importing outside the country. So I want to ask kuti munoitawo zve-contract farming here? Maybe you know kune vanoita zve-farming but in terms of market iri limited. So since muchida maize or some other raw materials for your production, what's the criteria for me to be one of your suppliers? Kuitira kuti munoreduce macost enyu yoti munoimporta outside the country, yet mutori nevanhu that capacity yekuti they can provide you my raw materials.
Thank you, my sister. Thank you for that important question. So, in our production processes, we've got plenty inputs that we use. Some of them are not available in the country, yes, and we import. But what is available in the country is our cereals. That includes the barley that we use for lager beer, the maize that we use in both lager beer and chibuku, and the sorghum grain that we use for our sorghum and lager beer brewing. In agriculture, we are contracting for barley 100%. We are contracting for our sorghum 100%, more than what we need, in fact, sometimes, because we have carryover stocks. And in maize, we contract for the significant part of our maize requirements, because in maize, we are a smaller player given the national usage. So, yes, we do contract, and yes, you can see our agronomists and ask whether you qualify to contract as a commercial in the village. And we do pay on time and fair prices. Thank you. Another question.
Just a question from Arnold. They're talking about whether we are sourcing our sugar locally. Yes, like what has just been indicated. We had carryover contracts from last year where we committed 20 our local suppliers were not available for us. But for this year, we have contracts with the Tongat, with Star Africa for our requirements for the rest of the season. We haggle on price, as I showed on the chart there on pricing. We believe that our local pricing is still a little ahead of other markets, and we do continue to talk to our colleagues in Tongat.
Good afternoon. Thank you for the presentation and congrats on the results. My name is Msoneko Sitseka. So I have a bit of questions. The goodwill on Schweppes was written off, the 913K within months. What specifically changed in the cash flow expectations or the discounts to trigger that outcome? And what can also prevent a further impairment in the future? You declared a 2% interim dividend. Do you have a full pay year out corridor you will defend whilst funding capex and navigating the tax issue? And what could trigger the change in the dividend policy? In terms of, you addressed it a bit in terms of the route to market issues. Do you have a quantifiable reduction in out of stocks and route to market bottlenecks since the half year? And how are you ring fencing the leakages to the informal channel that undermines the pricing architecture? And for the regional businesses, what are the hurdle rates and stop loss rules for UNB SA and NetBrew Zambia? And what strategic options are on the table if turnaround KPIs miss targets again in Q3? Thank you.
Well, I wish wish I had brought my pen so I could finish it. But you want to answer a few things?
Yeah, I think there's really nothing fundamental about us impairing the 913,000. It was too small a number to carry on our balance sheet as a goodwill, really, when you look at it. So I think there isn't anything about us changing a view, but in reality, given the performance of the business post-acquisition, it actually if I was the seller, kicking myself.
Okay, so I'll try and remember everything you asked. You were asking about the hurdle rates in foreign entities, to say what will it take. In fact, we are pretty excited about foreign entities in reality. We are thinking more about how will we fund our rapid expansion that we need when we cross over a certain point. Because remember, this category was not being traded in modern trade. You now find it in macro, pick and pay, and so on. We are spreading our wings from surrounding provinces to supply this product, especially Chibugu Super, all the way to the Cape. We are setting up a new brewery in KZN, but that's more of traditional African beer. That's the tap, the 4 or 5 day shelf life product. We only have one plant of Chibugu Super, and we are swimming very close to 50% utilization. Once we cross that line, we will need to have a rapid capital rollout program, because the market will have gone ripe and we need to invest ahead of demand. So in our minds, we are very clear that the path is on expansion and the path is capturing that profit pool. The economic performance in South Africa, the reliance on SASSA, the unemployment rates, the reduction in some of what may be the standards of lives in South Africa, and the fact that we are demystifying our legacy beverage from being an inferior offering to an acceptable offering like we have in Zimbabwe, all plays in line with our strategy that Chibuku or Sorghum beer consumption is a choice, not just an economic factor. Yeah? Just remind me again about the other question. Oh, dividend.
Yes, I think the question was, what is our dividend policy, really? That's in some of it. The Zimbabwean economy is variable. The policy environment is swings and turns. When we were sort of in a study, we were trying to be like our big brother of the environment, ahead of our current capacities. Seems to catch us by surprise, and resulting in what you highlighting there is your next question about what is the size of the lost opportunities, either direct imports or formalized imports from adequate brands and brands vary. The extent of our brands is able to meet most of those gaps there. The investment. So I spoke about the lager beer category and indicated that when we do comparisons on per capitas and our population, there is enough room for us to lose a little bit of market share in a growing category.
Thank you. Thank you for those questions.
Is here for you, Pasiti. I would like us to respond this in the context of the new competition that is coming in. Have we done enough investments in equipment to pace up with demand? It appears as if we continue to surpass our previous highs, and competition is coming in, and we're still holding forth. have we done enough investments to continue utilizing and taking advantage of the opportunity?
I'm assuming you are talking about Lagabia.
Yes.
Okay. Right.
Second question.
May I just answer you on that so that you can ask the second? So, you will remember that about 36 months ago, we commissioned 3 plants across our various categories. Soft drinks, to invest ahead of demand. In the other 2 businesses, Sogambia, market condition. In the Lagabia in terms of production capacity, and we thought it gives us room for the economy has surprised us with a very robust demand, where we are now operating almost optimally with no room for error. We wish we could commission a new plant next month, because we got it wrong in terms of the timing. But there is a lead time to the manufacturers being able to make the plant and come and install it. We believe that going up probably almost by a third in our production capacity, in putting up this line in Bulawayo and ramping up our Harare operation in space, to invest more should there be any reason to, without compromising our market. Yes, there's been an announcement about competition, but I think there are many things that must be considered in the environment. All those issues need to be looked at, I think, if we are to plan our economy properly. Barley grows like a wild grass in Ukraine, but is rain-fed in Zimbabwe. So if all the competitors of the world are to come here and brew, it is likely that some of our value chains will collapse, because it means we must also now import that grain that comes out of Ukraine at $200 compared to the one that we're nursing here. And the economic landscape must consider as people are coming in. I don't know whether they've been considered or not. Thank you.
Very much. My second question regards, probably I could have missed this. What was the effective valuation of Schweppes, and what's your expected payback period for that investment? And then tied to that, I've seen to around 19%. Are we likely to cross the 20% mark, given the economies of scale that are coming with increased capacity? Thank you.
So, as you can see from the valuations and from the reports, financial reports, there's been goodwill upping and so on and so on. The effective valuation was about 31, 32 million for the business. And so we bought 20% of that based on that 31, 32 million setup. Our run rates at the moment indicate that while at the time it looked like a 6 times type of multiplier, it is probably only going to be a 2.5, 3 times type of cover when we are done.
This is a mixed. We've got to look at each business a little bit more, into each business, and see whether each one of them is delivering the correct level of margin. You wouldn't get more, because you've got to deal with the issues about, because this is margin after your overheads. So we currently, in these numbers, we did indicate that we have absorbed a significant amount of sugar tax in our sparkling beverage business. So if that is corrected, we will see an improvement in the operating margin. But generally, or before I go into the next point, the 2 regional businesses were loss-making. So once that is corrected, it is correcting the operating margin. Like I also said earlier on, we still have some opportunistic gains arising out of the arrangements on tax settlements. So I think we're not targeting a specific operating margin, but each business is looked at intensely to make sure that it is benchmarked to other regional operators, and we understand why it is performing at the level where it is.
Thank you. Any other question? Yes.
Thank you. Thank you for the presentation. I think my first is more of a comment. I think from a sales side perspective, I think the Delta story has been sold very effectively. But as declaration from other companies are buying back their shares, so they believe that their shares are undervalued. And for Delta story, it's that direct declaration is sales side. I think we are selling the valuation story effectively. I think it's something that the directors in the company also need to
The share price.
no, not necessarily. But I think given that I think Mr. Makamri was speaking that it's trading at 50%, should be twice the current trading price. I think what the market gives market confidence is seeing the direct declarations coming through. I'm sure from other companies.
But the directors that own shares haven't sold.
Yeah, it's I'm sure the past 3 years those were coming through.
The second level of your question is about we have a running share buyback. One has to use converting your US dollars. We are short on ZIG, not short on overall liquidity, and we are not willing to support the share. We don't want to support it, but we should trade it at a fair value, and the market players must place it at the correct value. We see value, but like I'm saying, there are issues that the regulators and the managers of the stock exchange must deal with. That's what I'm answering. I think we hear the sentiment, but I'm saying we have to look hard and understand why the ZSE itself is not performing where it is. We also need to understand what is the attraction, or in a lot more detail, the VFX manager has a timing to see us shortly.
The strategy of going into primary production, whereas us as Delta, you were contracting farmers. Are we going to change?
There's pros and cons on both sides of the strategy. But we have not been honing in on farming skills, direct farming skills. We've honed in on agronomic supply, on primary production, when we have no that area. Is not something that would go into run orchards and things like that. So to say, is it something that we'll be able to run with and be able to know what the orchard manager is doing? If we don't, we would rather have technical partners. We're still talking. It's early days for us to come to market and say, this is what we're going to do. We're still rolling our sleeves and going through the strategic situation. Thank you.
Good afternoon. Thank you so much for presenting and it's also appealed for the interpretation that the tax authorities took in terms of interpreting the tax laws. How confident is the group going forward in the treatment of its transactions, considering the tax effects going forward in the current period? And could you also see a potential increase or a potential tax penalty coming through from the commissioner in the event that maybe the courts favor or side with the tax authorities on the matter?
So, you know, we have commented quite a lot. We have given color to where we think we are. We are a tax compliant corporate. We employ experts in that regard, and our accountants are under no illusion that we must be avoiding tax or evading tax. So as far as we know, we are compliant. Maybe differences in interpretation, and those differences will arise every time. And when they do, we try to reconcile ourselves with the tax authority, and where we fail, there's always the Sekuru that comes between us, and that's the courts. It is not a first preference to be in court. But be assured that we are tax compliant. We can't guess what the commissioner will find. And if they do find what they find, they may fine us. But hopefully, we are compliant because we believe we are. Thank you.
Yes, you can, Robert.
All right. Okay, Zimbabwe.
So, it going through the financial troubles that it is going through, owned by Delta before, but we own 0 shares on OK as of today. The strategic question as to whether we can go into OK or not must only arise when they cross certain milestones. We are not necessarily retailers at this stage, but we are not immune to or allergic to participating in that value chain. Should we find a good strategic reason to be in there, we'll negotiate ourselves in. At this stage, we haven't found that reason. We think that they can paddle their own canoe and become just a partner as we go into the future. Thank you.
Thank you, Matt. The second one is coming from Ronia Amudikuanda. So she says, would you make room for young farmers doing on contract farming?
Yes. Working with young people base that we have, it consists of people that we took essentially when they were coming out of college. And today they are some of the biggest farmers that are helping the nation, including growing barley for us. So those young people that have got the skills, because we lend money and contract on people based on skills, not based on wishes or based on capital. If you've got the skills, the land, and the wherewithal to go into the land and do what it needs, what needs to be done, talk to our agronomists, and we've got a checklist of how you qualify to be a farmer. And without a doubt, we are always excited and we celebrate the young people when they succeed. Thank you.
All right, the last one we have for now is from Mr. H. Bongodze. So I guess it's a comment. So he says, well done for excellent results, and just want to know if all your sugar requirements are now being
coming in for the second time. Thank you.
I suppose we have been standing for a bit. Our favorite beverages are getting warmer because the solar system question. The other issue is that there is always some of us that want to assist the CEO to get some order as he gives additional interviews. So just try and talk to my big brother. Yeah. Thank you very much. We appreciate you coming out despite having read the results. Thank you very much.
Thank you, colleagues. Bye-bye.